Welcome to the Commercial Real Estate Show, your source for market intelligence, forecasts, and success strategies. Hello, I'm Michael Bull. Thanks for being with us on one of the radio stations around the country, YouTube, iTunes, or maybe you're on the show website, commercialrealestateshow.com. Well, today we have a fantastic show for you. We're going to talk about the single-tenant net lease investment market. In fact, I'm calling this show the future of the single-tenant net lease investment market because there are a lot of things going on. We have interest rates going up. We have a new president, as everyone knows. We have the FASB lease accounting kind of taking hold of users and their real estate. So there's a lot of moving parts, and the single-tenant net lease market has always been seemingly a safe haven for investors. There's a lot of demand. Well, I've got some experts to kind of share with us what's going on in the single-tenant net lease market and what might happen moving forward. Please welcome my guest. First, Tim Kinney. Tim is Senior Director with Marcus & Millichap Capital Corporation. Tim, thanks for joining us.
Appreciate it, Michael.
We also have Nancy Miller here with us. Nancy is President of the National Net Lease Investment Group with Bull Realty. Nancy, thanks for being with us.
Thank you, Michael.
And you joined us even though you have a cold. Thank you.
Thank you.
Well, let's talk about briefly some of the basics of single-tenant net lease investment market, because it really has been a safe haven for investors. And you think about the downturn we had, gosh, it's been 10 years now ago, right? But it seemed like that the single-tenant net lease market was kind of the safest market to be in. What is the attraction for investors for single-tenant?
Well, I think it's still very attractive. Long-term leases, no guesswork, no cyclicalness as we would have in the stock market, and a lot more people are diversifying. So it's the same story, and the stability is still there.
Right. And if you're driving down the road, these are single tenant properties. There's one tenant in the building, and the tenant is paying all operating expenses typically. And as an investor, you're just getting a check. Sometimes we call it mailbox money, right? And these are usually national credit tenants, right, Tim, that they have really high credit, so the default rates are really low.
Yeah, we work with a lot of lenders around the country, and their portfolios that have these assets in there are their best performing portfolios by far.
Right.
And another thing on Nancy's point, also as far as the market, we see a lot of people moving from high intensive management properties and moving, we call it, maybe it's a multifamily property, so they're tired of tenants, trash, and toilets, and they move into single tenant net lease. Right. And we see a lot of that in the family offices. They don't want to manage maybe in a 1031 exchange. They want to get away from like I said, a multifamily property or something that's really difficult to manage. They just want to have that mailbox money. Yeah. And it's been a great performer over the years.
Yeah. Well, I think it's a great alternative, and we see it a lot. Maybe people are getting to retirement age, or they're kind of planning for the future for their children, and they're like, you know what? I don't want my children to have to deal with these shopping centers and these apartments. I want to give them just a single tenant net lease, or they really want to travel. I know a lot of your clients kind of live all over the world, and they have these properties, and they don't have a lot to do. Well, Tim, one thing that you mentioned that I want to talk about for a moment is national credit tenants, because I think a lot of our listeners understand that, but tell us the basic difference between a national credit tenant and a non-credit.
Yeah, it's pretty basic. You have as long as you have a Standard & Poor's rating of BBB- or higher, moves up the scale from there. That's your benchmark for a credit tenant. And there's a big difference between, as the lenders look at, a credit tenant, you're good to go. You're ready to put the financing on. You don't have to look at the financials of the tenant. Once you get below investment grade, then you're looking at the financial statements and trying to see if you think that's a viable concern going forward. So there's the difference in the market. It's binary, basically, right, between a credit investment grade tenant and a non-credit tenant, which could be your quick serve restaurants, QSRs we call them, or any other industrial or any other type of tenant that's non-credit. Doesn't mean it can't be financed. It's just a little bit more difficult.
Right.
In fact, I have a situation with a company. It's interesting. They're a private firm. It's their corporate headquarters on a 15-year net lease, and I called one of the large banks that has a single tenant net lease division, and they said, well, we bank that, the tenant. We'll finance that all day long.
And that tenant is not really considered national credit,
No,
right?
Right.
So national credit and non-credit tenant doesn't mean they have bad credit.
Mm-hmm.
It just means they're not BBB rated or above.
Or they don't have any bond debt that can be rated.
Okay.
And Nancy and I are doing a deal now, again, non-credit tenant. I sent that up to one of our, this is a bank that has a division that only does single tenant net lease. They're up in the Midwest. And they said, like, we've already seen these financials. We like them. We'll finance it. Mm-hmm. And so there are pockets of these banks out there that we work with, that I work with, have for years, that will lend on a single tenant net lease property anywhere in the country for a borrower anywhere in the country. Yeah. And so that gives people a lot of flexibility.
Right. Lenders like single tenant, right?
They do.
And then tell us a little bit of the difference on the value side when you're selling these properties, and then on the financing side on single tenant properties between a national credit tenant and now maybe you're dealing with your franchisee. Right, so now you're really dealing with the credit of the franchisee, right? What is the difference, first of all, on kind of evaluation when you're selling and helping buyers buy and sell these?
Cap rate wise, you're going to find a little bit higher cap rate or higher level of risk if it's a franchise. If it's a multi-tenant franchise, multi-location franchise, for example, like a Wynn Foods, whose is publicly traded on the New York Stock Exchange, and they are the largest owners of Wendy's, I wouldn't lose a wink of sleep about them as a franchisee. But if it's a Bojangles franchisee that's a startup that has 1 or 2 locations, I would be somewhat cautious, and I'm likely to have a little bit of a higher cap rate than if that was a corporate Bojangles, for example. I might be trading in the 5.5 cap rates. As a franchise location, I might trade in the 6.1, 6.2 cap rate range, depending. So there's a big shift.
All right, so if I'm an investor and I'm seeking yield, then I may be comfortable, if I'm comfortable with a little bit of extra risk, then I may want to go for that franchise. But what about when I go to finance it? What are you going to tell me?
Well,
don't tell me good luck.
No, it's actually one of the benchmarks is the number of units the franchisee is operating. So a lot of the guys will say, look, we don't want to finance anyone that has less than 10 units. Mm-hmm. And then it's going to boil down to the, it's a little bit different underwriting for mm-hmm. these, because they're going to look at the financials of the franchisee, and then they're also going to look very closely at the sponsorship, or that's a fancy way of saying borrower. Right. And they're going to, so your underwriting shifts over to more of a focus on the strength of the borrower, their global cash flow, net worth, and liquidity. Yeah. Those are the keys. So there's a little bit more of a balancing act. When you get into the weaker credits, it's a 100% shift, 180, just to the borrower. Yeah. Away from the tenant. They figure, what happens if something goes sideways here? We want to make sure that the borrower has the financial strength to re-tenant the property.
Okay, and that brings a question up I think my listeners will have when you talk about the true credit tenants. Then can I get a loan with no personal liability because of that tenant strength?
Well, that's a great question. Yeah. We could do a whole show on non-recourse versus recourse, but yes. I do a lot of non-recourse lending, because a lot of times either the borrower's never signed a personal guarantee or a recourse note, or it's an investment group or an institution. So we do a lot of that non-recourse in the investment grade world. It's something I just again was on a panel discussing non-recourse lending. You have to watch out now, Michael, because there are so many carve-outs. Back, say, 10 years ago, you had 7 different bad boy carve-outs, they're called. Mm-hmm. And now it's pages full of them that the lenders have filled in, that there was I can give you a myriad of examples, but if someone is looking for non-recourse financing, they also need to have a good real estate attorney or an intermediary that understands.
Quick answer before the break. If I have credit tenant, I want non-recourse, do I have to put in more equity? And what difference? How much more? Or no?
No, not really. No.
Okay.
No, it's either again
typical down payment on a credit tenant deal.
30%.
30%. I can't get in with 10% down. I've got
not anymore.
I've got that. Right here. All right, we're going to take a short break.
We could.
We're going to take a short break. Stay with us. We'll have more on the single tenant net lease investment market. Stay with us. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.